Hey, this is Clayton from Squire Wealth Advisors. As we come to the close of the year, I wanted to talk about tax planning strategies and maybe the top 5 strategies that we can implement now in 2022. So I've invited Brandon Allfrey from Squire. He's the head of our tax department at Squire. Incredibly smart. Wanted to bring him on to talk about just his top 5 tax planning strategies. So Brandon, thanks for joining me today. Please enlighten us. What are your top 5 for
Yeah,
2022?
happy to share these, Clayton. Like I'll hit them pretty quickly, and hopefully something sticks with somebody here, right? So number one, uh, take advantage of the tax deferred retirement plans that you have available to you. So if you can max out in HSAs, 401ks, IRAs, whatever it is, take advantage of that. Great opportunity to save some tax. So that's number one. Number two, has to deal with charitable contributions. There's a couple of facets. We'll hit them really quick. One, this makes the most bang for the buck when you're looking for tax deduction. So if you are charitably inclined and want to give more, you want to get yourself over that itemized deduction limit, you give opportunities to do that. A couple of ways to do that is give it directly to a charity, or if you have an opportunity to give a larger amount and you don't know where you want to spend it yet, you can put it in a donor advised fund, which gets you the deduction now, and then you can choose over time how to put that money to charitable organizations. One of those things to consider in that kind of strategy is looking at a bunching strategy, which means that you'll bunch all of your charitable contributions into one particular year, so you have a higher itemized deduction year, and the next year or the previous year will be you take the standard deduction, and you want to kind of offset those with a higher income year and a lower income year, and the blended rate over 2 years will be better than just trying to manage it individually separately. So that's a great strategy to look at with your tax advisor.
Yeah.
The last thing there I want to add is if you're over 70 and a half and you've got a retirement account, instead of having to take a required minimum distribution at 72 now, you can make that charitable contribution directly from your retirement account to a charitable organization and not have to take income into your tax return. So it's the same as taking a deduction because you're not taking any income in. And so that's that whole charitable contribution strategy. There's a lot of things that go along in that. Next, let's just move to just some investment strategy and how to deal with taxes. If you've held securities in your portfolio for greater than a year and you sell it, it's a smaller tax rate than if you sell it before a year. You may have a year where you have a lot of gains. Before the end of the year, you'll want to look and see in your portfolios to see if you have losses that you can sell to offset the gains and the losses to make it. We call that tax loss harvesting. It's one thing where you and I get along. It's like tax loss harvesting makes sense to you and I. And so you kind of do that in tandem and work together to figure out, how can we get you in an investment strategy that's working and also tax efficient with some tax loss harvesting. So
yeah, and we get along in a lot of ways, Brandon.
Oh, yeah.
One thing I want to add to that too, because it is great when you have some things that have grown and some things that have lost, to do that tax loss harvesting. Another element of tax loss harvesting that we do is if you have an investment that's lost, you can sell it at a loss and then buy a similar investment that's also dropped in value. So you're not missing out on the growth opportunity, but you are gaining the benefit of those losses. Now you're limited to that $3,000 limit each year, right? And so if you lock in 50,000 losses, you may have to carry it forward over a number of years. But just kind of an additional thing to add to that tax loss harvesting element.
Yeah, definitely. Good strategy there. So let me just finish with one last thing, Clayton, and that's just if you own a business in most states now, you can circumvent the limit that's on your state and local tax deduction as an individual by having your business pay the state taxes that are due on your behalf, taking it as an ordinary deduction against your business income to lower your income there, and it doesn't affect your cap of that state and local tax. And so there's some timelines that need to happen, like in the state of Utah, it needs to happen before the end of the year to make those payments. Other states allow it where it has to be done by the time that the return is filed, but you can take that deduction, circumvent the state and local tax cap limit that you've probably hit anyways, and get the benefit of prepaying those taxes. And that just comes as a credit on your state taxes at the end of the year that it's been prepaid. So if you owe a little bit more money, you owe a little bit less, right? So good opportunities. The states have been really, really forward thinking and trying to help how to eliminate that cap. And so it's a good opportunity to look at if you own a business.
And that's a great one too. It's new for 2022, at least here in the state of Utah. And so certainly an important one. We could talk about that one for a while, but appreciate you summarizing those. I love those 5 strategies. And hopefully to the listeners and the viewers out there, this has been really helpful. And if you have further questions, feel free to reach out to Brandon or myself. Our contact information will be in the show notes. And Brandon, thank you for joining me.
Yep, happy to do it, Clayton.